Good morning. It's Thursday, November 7th, about 6 a.m. Central Time. So your hangover should be cured regardless of political affiliation. So let's get back to focusing on what matters: futures, commodities, and precious metals here. So if you haven't done so, please like and subscribe and help us grow this channel out. So we're going to rip this one off like a Band-Aid. So overnight, the precious metals are mixed after yesterday's Take It to the Woodshed Wednesday. So remember, successful trading takes consistency, discipline, and a long-term view. One day shouldn't just make or break you as a trader. Now looking at the overnight price action here, we do have December gold down $4.50 here. The low of the session was $26.50. Is that the new floor? We're gonna have to wait and see here, but possibly it could be. We'll look at some technicals. We'll also look and see if the market is making a higher low on the charts. Now the silver market, it's tracking gold. It's not tracking copper at the moment. So looking at the silver market down 17 cents, that's down about 0.5% at 31.16. Now the copper market up 2% overnight at 433. That's up 860. The high of the session was 435.70. So we did see a pickup in Chinese exports overnight. The platinum market down $10 at 982. It did make a nice recovery yesterday into the close here, but is the question surrounding the demand of EV vehicles weighing in on that market? Crude oil futures down about 1%. That's 82 cents, trading at 70.88. Are the geopolitical risks fading out there with the Trump administration? Now looking at Bitcoin, a little bit of profit taking coming into that market and a little bit of rotation too. We're seeing Ethereum up about 4.5%. We're seeing Bitcoin down about 1.95%. I think traders are rotating into other different cryptocurrencies to leverage up their positions. So on the Bitcoin market, because we trade Bitcoin futures, we will look at some entries for some longer term positioning here on any of these corrections. A couple things we don't normally talk about on this channel here is corn and soybeans. We're seeing China, they could be possibly front running by securing some of the grains ahead of Trump taking office and implementing tariffs. So look at a corn chart, look at a soybean chart. Soybean futures making a miraculous recovery here into the close yesterday and then re-accelerating higher today, and the corn market breaking out of a nice pennant pattern to the upside as well. Those are markets that we do trade over here. We have real nice write-ups here. My partner Oliver Slope, he's oftentimes on RFD TV. He does a whole write-up with the Grain Express. Let me know if you want to see that. We can always put you down for it. So, and then finally, the S&P 500 here, it's continuing its gains up about 11 points at 59.69. I believe that is targeting that 6,000 mark, as is a nice round whole number there. So you shouldn't be shocked by the move in the S&P 500 yesterday. We've discussed this type of rush back into the equities after an event risk type situation. So what I want to clarify on the event risk is what happens is that you get this event, people will liquidate 10% of their portfolio, if not the whole thing. Then half of the people will get the desired outcome that they were looking for, so they redeploy their capital. Then you get the disgruntled half that got out of the market. They are going to re-enter the market too because they're missing the move. Then what happens is the shorts cover and then the chasers emerge. So this situation, it tends to happen about once a quarter. We were just seeing it around CPI reports. We were seeing it around Fed meetings before. So it was the election was the most recent one. So we'll want to look forward and see what that next major event risk is. What would take it for people to have to reduce their portfolio and then have to chase later? So looking at some of the economic data to watch here, really it's just two major things here. So we're still digesting Trump's policies, and I had to do some digging here back in the closet for 2016. I did actually meet Trump. He signed a hat for me back in 2016 at a rally, and it was like Wisconsin, middle of nowhere. And then I had to grab my notebook here to look at what happened in 2016. So the global equity markets and the currency markets, they almost ran that exact same playbook. And it was after the 2016 Trump's win, U.S. small caps, they outperformed the large caps. The U.S. equities outperformed the global equities. The dollar had strengthened, and the momentum actually continued throughout the rest of the year. I believe that's why people like Goldman Sachs are coming out with like 6,300 target for the end of the year on the S&P 500, if not just shortly after here. Now, looking at the precious metals and the base metals, the gold market with that sell-off yesterday, it was a lot of repricing. It was the stronger dollar, it was the rising rates, and it was just way too much to handle. So short term, yes, could be a little bit bearish on the gold market. However, this bearishness could just last a few days or just a few months here. If you look at 2016, and this was some of the digging that I did, 2 weeks after the election, gold was down about 5%. 1 month after, it was down about 4%, starting to recover. 3 months after, it was up 7%. That was when he secured office, and the implementation of and discussion of tariffs had already taken place. So the market was already factoring these things in, and I think that was a big repricing yesterday and really pulling forward what the possibility of tariffs would have on these different markets. Now, the Federal Reserve, they are going to have a meeting here today. You do have a 97.4% chance that they do cut rates. However, the Fed has the same problem that many of the markets do at the moment is that there's no model to really go out into the economy into 2025 because we only have talking points from Trump. We don't have them actually in office. So where the Fed could kind of model and gauge what the current administration's agendas were, that's how you had several interest rate cuts going out into 2025 priced into the market here. So, but if you focus on the data where we're at and you get data specific, so leave the feelings at the door, and you really still want to be long-term, have the exposure to inflation and inflation-related products. Now, gold and silver, copper and silver at the moment, and I kind of want to bundle these two together. It's unfortunate that the silver market is not responding with copper overnight. It might just take a little bit more time in order for that to happen because, again, copper is up 2%. Silver is lagging down about 0.5%, but these assets are both recovering here at the moment. I wouldn't be surprised if we don't see prices go positive here early in the morning session. Is that when you go back and you look at 2016, what was the first tariff that Trump did? His first action on January 18th was a tariff on Chinese solar panels and washing machines. And those solar panels, you've got a lot of silver in there. You've got a lot of these elements in there. So the market really overshot on that one, expecting the same type of deal. And then on March 18th, it was steel and aluminum where he implemented the tariffs as well. So these markets really pulled all that forward. So we just got to keep an eye on a few things here. We got to keep an eye on the Chinese response, and I think that they've already dealt with Trump before. Trump has dealt with them. I think he has a good relationship with Xi Jinping, so I think that they'll overcome some of these things, and it won't be as dramatic as 2016. We'll also want to watch, remember, we're data dependent, manufacturing data, the PMI data in China, and also the stimulus measures that China is expected to deploy. Now, we will have a lot of economic data coming out today, the unemployment claims and things like that, but it's all going to be overshadowed by the FOMC's statement at 1 p.m. Central Time and then the press conference after that. So expect Jerome Powell to go a lot of I don't know type of deal. I don't know. We're watching the data. We'll see what happens. So he's really going to be kind of vague as far as his response there and how it impacts some of these commodities. Well, it's a bit of a coin toss at the moment. So you go back to my trend following system, which looks at longer term trends on these markets. Yesterday's big sell-off here did cause many of these markets here, specifically in the metals complex, to go neutral, like gold, like silver, like palladium, like copper, all went neutral. Platinum is the only one that is still really long at the moment here, but not a recommendation to get long. We got to see how these things act here. So you look at the some of the larger moving averages, like the 50-day moving average. Gold futures did go down to it. It stopped on a dime at that level for whatever reason. I believe that it was close closer to that 2650 level, and that's where some of the support and the buyers came into the market. Many people had cleaned out of the metals ahead of the election, now re-entering that market a bit here. The silver market, yes, a bit more of a dramatic overshoot on this market. We'll have to see if this market can form a higher low and start to chew its head forward here. So we're going to want to look at some of these resistance levels like 3157. We've got to overcome that. Then we'll start to see more and more market participants re-enter that market as well. And then the copper market, real nice snapback here today. So I think that from a long-term inflation standpoint, you're going to want to see copper futures as that first one that people are going to go into that market here. So we've got to recapture yesterday's highs right around 445, take out 450, and then I think prices can really move up from here. So you got any questions? Lot to unpack. A lot of things going on here in these markets. You got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.